Unbeknownst to you, Cathie Wood is suddenly more optimistic than ever about Tesla. Due to market turbulence in the last few months, many people have lost faith in Tesla and its CEO, Elon Musk. In reality, a lot of people have removed Tesla stock from their portfolios due to its poor performance. Cathie Wood, on the other hand, demonstrates her distinction by continuing to back the top EV manufacturer. Take note of this one. Despite what seems like insurmountable obstacles for Tesla, Cathie Wood says she is more optimistic than ever and even expects a five-fold increase in the company's stock price in the next 5 years. Early in January, Cathie Wood reaffirmed her belief in the electric vehicle maker that many other investors had given up on when she purchased Tesla shares on the day of its largest decline since September 2020. In the first U.S. trading session of this year, funds backed by Wood's firm, ARK Investment Management LLC, purchased almost 176,000 shares of the manufacturer based on ARK's daily data. The acquisitions coincided with a 12% decline in Tesla's stock price after the business missed quarterly delivery targets in spite of generous incentives. According to ARK trading data gathered by Bloomberg, Wood's exchange-traded funds have acquired slightly more than 938,000 shares of the EV maker since they began their latest purchasing binge on October 3rd. ARKnet purchased Tesla stock for the first time in 7 quarters, from October to December. As many of you are aware, Tesla had a difficult end to 2022. They made significant price cuts in the United States last month, first providing a $3,750 price cut to customers who took possession of a new Model 3 or Model Y by the end of the year. The incentive was raised to $7,500 in December, and for the last 11 days of 2022, 10,000 miles of free charging were included, but the premier EV manufacturer's supposedly bold initiative didn't end up working. Following the announcement of lower-than-expected fourth-quarter deliveries, Tesla continued to disappoint investors. Although it was later revealed that the tax incentives wouldn't apply to all of the automaker's goods, one could claim that Tesla was offering discounts on automobiles the prior month in order to establish updated tax credits that would be flowing out in 2023. Given that Tesla has missed quarterly deliveries for 3 quarters running, a number of analysts have lowered their price estimates for the stock, bringing Wall Street's average 12-month prediction down to its lowest level since October 2021. Nevertheless, the shared target price suggests that during the following year, shares should more than treble. In relation to speed bumps, Tesla's stock price has dropped significantly since Elon Musk took over Twitter. Since Musk formally assumed leadership of the social media network on October 27th, the stock has dropped by 45%. In actuality, the market has increased by 4% throughout that time. Tesla shares have dropped 70% since their peak in late 2021, according to the stock chart. The lower-than-expected fourth-quarter deliveries upset investors, but the good news is that Tesla is still gaining market share. Despite the difficult year for automakers, Tesla managed to see a 40% increase in car deliveries in 2022. However, over the past few months, Wood has been steadily adding to Tesla's stake, if there is one. Since the stock has been declining, she has been adding. And now that it has turned this year, she hasn't stopped. Cathie Wood, the CEO of ARK, is still optimistic about Tesla and claims that the surge in oil stocks is illogical. Star stock picker Cathie Wood of ARK Invest stated in a webinar a few days ago that she is still positive on Tesla, the creator of electric vehicles, and that the current run in energy companies will soon come to an end. Wood was severely hurt last year by the Federal Reserve's aggressive pace of interest rate hikes, which had a significant negative impact on the kind of technology equity she focuses on. Her $6.8 billion ARK Innovation Fund is up. However, despite the almost 30% drop in the price of oil, the surge in energy companies over the past 6 months indicates that value stocks may now be overvalued, according to Wood. The CEO of ARK Invest stated, "From our perspective, the market is defying logic." Tracking the stock of energy businesses, the widely owned Energy Select Sector SPDR fund gained 1.2% on Thursday and has increased by about 40% in the past year. In contrast, Wood predicted that over the next 5 years, Tesla will continue to gain market share as long as the world's oil consumption declines by at least 30%. Wood predicts that the corporation will continue to aggressively cut prices, putting pressure on other manufacturers to follow suit and severely harming its rivals. Our level of optimism towards Tesla is at its highest, remarks Cathie Wood. As a result, ARK continues to be bullish on Tesla and predicts a 10x increase. Wood sent an update to investors via email, stating that if Tesla could reduce the price of an electric vehicle by half, it could increase its addressable market by 10 times. Many developments in the auto business, in Wood's opinion, put the traditional auto industry and, by extension, traditional automakers in jeopardy. Wood cited Tesla's self-driving taxi platform as an illustration of this kind of creative transformation. According to Wood, most other automakers will not be able to match or surpass Tesla's combination unless they wish to incur losses on their vehicles. Wood stressed how crucial that is from both a performance and a range perspective. When asked what she thought about big businesses trying to compete with Tesla in the development of electric vehicles, Wood said, "They are failing miserably. It's not the same with branding." Though I believe people are starting to switch from gas power to electric power and are comparing the specifications of different automobiles, these other automakers have strong brands and a lot of brand loyalty adds wood. She claimed that while brands alone might still be able to influence them, they won't have as excellent of an electric car as Tesla would. The CEO of ARC, Cathie Wood, expressed their viewpoint in an interview with Yahoo Finance last year that gas-powered cars will become outdated in the next 5 to 10 years and that the traditional auto industry needs to find a method to switch to electric cars. Tesla is currently leading the automotive business and has risen to be the biggest automaker in the world. A new age is dawning for Tesla and the electric vehicle industry as a whole, and the business is putting itself in a position to lead the way. Tesla has a lot of irons in the fire. Even though results over the next few years might not match past performance, it's important to consider carefully if now is a good moment to make investments. During a CNBC Squawk Box interview in mid-October, another ARC official shared excitement about the top EV business. ARC Invest CFA Tasha Keeney explained why ARC has a favorable opinion about Tesla. According to Keeney, the percentage of cars sold that are electric is just in the single digits, so we must keep in mind that this is still a young business. Wood also stated in a separate interview with Yahoo Finance that Elon's primary responsibility at Tesla is guiding the company toward an autonomous taxi platform, which she anticipates will materialize in 2024. But we do definitely see Tesla as one of the market leaders both in electric vehicles and in autonomy. Wood added, he may believe it will occur the following year. I believe he's still fully committed to that. In the world, Tesla is the leading vendor of electric cars and is in a good position to benefit from some of the IRS tax benefits for producing battery cells and locally built EVs. However, Tesla will probably have to make concessions on gross margins in order to achieve its target of increasing deliveries by 50% yearly over a number of years, a goal that the company has warned it would not reach in 2022. Tesla has announced planned maintenance at its Shanghai facility and lowered pricing throughout its lineup in China. Analysts and investors with a bullish outlook think Tesla will keep spearheading the electric vehicle revolution now that it has finally acquired traction. Additionally, they think Tesla will be a leader in other green energy technologies, including energy storage systems and solar panels. Conversely, pessimistic analysts and investors believe the company won't live up to the hype and will just end up being another manufacturing company, not a unique and inventive one. Bears believe the company is too highly subsidized, overvalued, and vulnerable to competitors. Other analysts predict that from around 1.3 million cars in 2022 to 1.8 million to 1.9 million in 2023, Tesla deliveries would increase by about 40%. Fulfilling 2023 delivery projections will be crucial in persuading investors that the 2023 earnings estimate is reasonable and that Tesla stock may have sold off excessively in the previous year. All things considered, Cathie Wood and her investing company ARK Invest are still far more optimistic about Tesla shares. Wood, a strong believer in innovation, consistently expresses her support for Tesla and its upcoming cutting-edge initiatives. To receive further updates in 2023, subscribe to Tesla stock.